Merchant cash advance alternative up to $500,000 with 1 to 5 year terms and 6 to 18% cost of capital, which is interest, even fast funding times, and a monthly repayment, plus 0% interest for 6 to 18 months. I'll be walking you through what that is and how it works. Welcome in. This is Michael with Viral Funding Solutions. I'm a business loan broker expert who's been doing this for quite some time, has been helping out a lot of businesses of different backgrounds and industries get the right type of financing, get into the right vehicle. So it not only helps you short term, but also longer term, have the right strategic partnership and right roadmap. Now, what is a merchant cash advance in case you're asking that question? And I'll jump into what is this alternative where perhaps it's better off for you because you're worried about the type of repayment. You can't afford to do that. Maybe you're going cash flow negative, or you will endure that at some point, short and or longer term, and a few other things. So a merchant cash advance is basically where you're getting funding. It's not technically considered a loan. It's based on future receivables. So we look at your bank statements, sometimes 3 months, 3 to 4, 4 to 6, sometimes up to 12 months, depending on the type of business model, season, etc. But we look at it and go, hey, what can we give you based upon what you're doing now? What could possibly you be doing in the future? So we give you an advance based on those future receivables as well, and you're paying back a percentage with what you're making daily. So if you make a smaller amount one day, less gets taken out. You make more one day, then more gets taken out. Or there's a fixed percentage, excuse me, that you know is getting taken out of your account. It varies. There are hybrids out there, but they're usually daily, weekly. Sometimes there's a monthly repayment, but there are not many lenders out there. I know of them, but they're not easily giving that. They're giving that to more premium and platinum clients who have way stronger cash flow and revenue per month. Credit is a factor, time in businesses as well, but that cash flow, because it's based off of revenue and it's much harder to get you approved for those. Nonetheless, daily or weekly isn't bad necessarily. It just is different for each individual, their business, your cash flow. It's more predictable what you'll be doing in sales day to day or every other day or whatever it is that you're generating. So it helps you, and you need funding much faster. So this is a solution you turn to, but not everybody will get qualified. Yeah, you can get in with lower credits, like 450. In a lot of cases, it's 500 and above with just 3 months of time in business in a lot of cases, with maybe a minimum of 3,000, 5,000, 15, or 20,000 a month, depends on the lender. But you may not be happy with it. Maybe you've gone down that route. So that's a gist of what a merchant cash advance is. I'm not going to go too specific on it, but I've left content on it down below in the description. You can check out that one and all their alternatives that I won't more or less cover here in this video. But now let me jump over to a different tab and go into what this product is and what it entails. So if you guessed it, it is a personal loan that you can use for business with a longer term, 1 to 5 years generally. It's kind of like an equipment financing loan in the sense of the term being 1 to 5 years. Now it's different because it is an equipment loan, how you're financing it, leasing it, and then owning it, etc. And you can get monthly repayments as opposed to a merchant cash advance where it's usually daily or weekly. And to get into that weekly, you really have to have better credit. 600 and above can help, and you want to have over, I wouldn't even say 15, I would say closer to 25,000 plus per month, and consistently doing that on your lowest month, 25,000, perhaps a year is all they need, or 6 months of time in business to help you even get into a weekly repayment. But that may not even sound attractive enough. And you have to look at this and go, does a monthly payment make sense for me at this moment? It's not the same for everybody. Just because you're generating a substantial amount of money in your business doesn't necessarily mean that you're equipped to take on a monthly repayment. Look at your overhead. Look at your expenses. What are you enduring now? What could you be enduring in the future? A lot of people can't even pay their rent. There's mortgages. You have different credit cards that you're having to pay back. You're already flooded. There's other debt that you have to service. And so you have to consider the costs of going on a monthly repayment. And if you can make a huge lump sum or whatever that lump sum is, even if it keeps it relatively low, can you afford to do that? But a personal loan is one that I've been preaching and sharing with individuals, and I'll go in through some of the qualifications and what it takes, and I'll leave more content on the personal loan down below for you to get started, as well as the free questionnaire form in case you want to get in touch with me. I have that. where you can get a very personalized and customized email response on your best funding option and options thoroughly broken down, detail per detail intro to the different products and services, whether you can qualify for them or not. And there's even an application for you to get started there with the way that the lenders do things with fintech companies and the way we have things set up nowadays structurally. And I'll show you the documentation, how it can get submitted, what I would prefer, what is your flexibility there. And you're going to get the best of the best, a conclusion, a roadmap, how to do this effectively, what it can look like time down the road. If you're not there yet, what we can build into. So as I scroll down here, and again, I've made a video on this one separately that I'll link you to down below that'll look like this more or less, but it is the personal / startup loan option, and that takes it another step. So now you've heard about a personal loan, and it's also a startup loan. They're somewhat equal here. And if you're a startup business with no revenue in your business being generated, then this may be an option that is helpful, but you have to understand the parameters of it and why this is attractive to people who do not want a merchant cash advance and how they can even qualify. So another great option behind a merchant cash advance, and I put great option behind the MCA, and that's, again, subjective to the individual. You may be somebody who's like, I'm beyond, I'm better than an MCA, but you may not qualify for an unsecured term loan, which I've already done content on. There's another alternative to a merchant cash advance. There are unsecured term loans, lines of credit, equipment financing loans, and a few other ones that I'll link you to down below, that if you don't even qualify for those, the personal loan to that extent may be your only option or your best option to go into. So another great option behind the MCA loan, you can say the unsecured term loan, even the secured term loan, secured lines of credit, unsecured lines of credit, equipment financing, etc. You can even use this as a down payment towards property. Maybe you're trying to save, you have a certain amount of mortgages, and it's not about growing your revenue, but about saving. The personal loan is a great option on top of that. And if you have, SBA related things, you're looking for a down payment or you're looking for an extended amount, the SBA doesn't work for you for certain reasons. And I created a video and several ones on the SBA 7A and other programs. I'll link you to down below. But you'd want to have at least a 680 experience, if not a 700. A 700, the majority of times, is 680. If your credit looks very clean, we can consider that. But at a 700 level in credit, experience-wise, right? We're getting into the whole credit realm, and you've probably heard about FICO and how that's a lot of it's determined based off that. So make sure you have a 680 experience, but better a 700. The majority of people get approved for having a 700 and above. 680 may be looked at, but it has to have very low credit utilization. And I'll get into this, but things that are reporting positively, and you've probably been at a 700 level, but for some reason you had to drop down a little bit. We can understand things. So requirements, 50,000 in annual revenue. And this can come in the form of things like W-2, or we talk about taxes, pay stubs, etc. How can we verify your income in the form of taxes, pay stubs, etc.? Is there another way? We're looking at W-2s, but understand this, that you're not being looked at on your business as if you were to go get a merchant cash advance. We're looking at those business bank statements underneath that business checking account primarily. Now, there may be one or two lenders out there who look at a personal checking account, but you're going to get approved for a lot less. I've spoken to a lot of people on that previously who are out there now getting their business checking account, have at least 3 months of business bank statements being deposited into that account. Transferring from personal to business, this doesn't count as stated organic revenue to a lender. So 50K plus in annual revenue, taxes, pay stubs, etc. How can you verify that income? We're going to need to know, and we're going to need to see it. So I'll gather the documentation before we send it to the lender. So 0 time in business, that's your advantage there too. So with the merchant cash advance, you may require only to have 3+ months. It's very relatively low. But if you want a personal / startup loan, 0 time in business, which is speaks volumes to a startup, because you obviously don't maybe have 0 time in business, or you have something established, you just haven't really been operational. So we have to look at this. But here's the thing, it requires you to have at least 5 trade lines personally built. Excuse me. Can you have that? Can you show that? So make sure you're having these installment loans, revolving lines, mortgage payments, auto loans, other debt obligations, perhaps whatever it is that can show and display on your credit report and reports. I've gone through this with people. I used to always ask for like those soft pull credit reports so I can visually look through them and see if there are any discrepancies, what can possibly look like in this scenario before we go to a lender. But we can look at that in the application process. With the soft pull is what we go through in a personal loan, just so you know that it's a soft pull there. And so 0 time in business, but it requires you to have at least 5 trade lines built. And that's very important. Also, on the business credit end, so if you haven't even begun building your business credit and establishing that, I would do so. And I'll leave a free video series down below on building your business credit correctly. I'll walk you through some videos, my system that I've been able to use effectively to do things that are not tied to my social security number, rather than my EIN, protecting myself so I'm not putting everything underneath my personal name and they're not having to do it that way where they're coming after me in that regard. But if my business is operating this way, I'm putting more underneath that, and it comes and it falls back on that. So 20,000 to 500,000 are the approval amounts. And I know you may be thinking, well, I wanted 800, I wanted a million, 2 million. Now, the other question is, can you even qualify for that amount? You may. Okay, so we go over here and we look at this file and we go, yeah, I didn't get that amount, or yeah, I did get that, so let's follow forward with that. Or no, I didn't, but it's acceptable. I can take what I can get now and I can come back for more. That's how you play this game. And you think about it and go, if I didn't get the full 1 million, but I only got 300,000, I'll start off with that. I'll revise my business plan and say, can I use up to 300,000 right now? And what am I going to need to use it for most effectively? And then come back and say, I need to get additional funding to complete my project or projects. That's how most savvy business owners slash entrepreneurs like myself and yourself, as well as many others, do this. And it's no surprise, but you have to come back. And most business owners are not adept to understanding their financing. So don't feel bad about it. Have somebody take care of it for you. So when we speak about things and I'm asking for documentation, will it be ready? That's another question. Whether it's an SBA loan, lower documentation, mid-tier, higher tier, I'm going to need to know, do you have that documentation ready? Why will I go into the trenches with you on an SBA loan when I show you the documentation and you think, yeah, let's do it. But then it comes to the point where, hey, I don't have this. I don't do this. No, we're going to clear that up before we do things because we're not wasting energy and time. We're not causing friction and resistance. So 20,000 to 500,000, think about what that can be used for. You may have a target goal in mind, but even if you didn't hit that, can you readjust? Can you look at this and go, how am I applying this? Can I use a personal loan? Maybe I can also get a merchant cash advance. Perhaps, yeah, you can combine the two. Did you ever think about that? Merchant cash advance alternative, a personal loan perhaps can work for you. A personal loan, and then maybe you're looking to get an SBA loan that you can get approved for. For a down payment, you're using a personal loan or you're using it as additional funding. However, you are deciding to use that. But think about what you're doing when you have the money. And there's multiple sources. We can get creative on this. You use a personal loan to purchase a business. Maybe an SBA loan is what you're looking for, but you needed a personal loan to help you with that. You needed a property, so we're going to use it just a personal loan to help you out with that. Maybe we need to do a combination of a personal loan, a true business line of credit, and a term loan. So you have 3 things towards the purchase of an existing business, or multiple things you're doing. But you have to understand that when you speak with me, I'm going to show you what the contingencies are in all of this. So 700 plus experience score, I would rather prefer you have that as opposed to a 680. Not all 680s get approved, but 700 is what you want to shoot for. 6% to 18% cost of capital. Now, that is what we look at the rate, the interest rate level. And so already there, it speaks to a lot of volumes. If you've ever gone through a merchant cash advance lender or a marketplace, and that's another thing, be careful. I've had people who, even as we speak right now, it's happening to a variety of individuals, and it's not coming through me. It's not my organization. It's not me at fault here. But what happens is you may have already applied to previous lenders indirectly or directly, and you just didn't know what was happening on the back end. Perhaps you had already applied to a marketplace and you've been getting contacted while we're in the thick of things, or we're in the beginning of the personal loan or a different product or service. And you're like, well, ever since I applied with you, I'm getting contacted by multiple parties and this and that. And I will go ahead and verify that. And I know for the majority of the time, I work with the best lenders and underwriters, whether it's we're working through them directly or indirectly in a brokerage. We already have those direct lender partnerships, and we're very safe and secure about how we protect your information. And it's not coming through me the majority of the times. And I verify that with my lender, my organization. You don't even have to verify that with them. I can just get back to you on that basis. but it's not coming through me. So in case we're going through something like a personal loan, startup loan, etc., and you're hearing from other entities, just ignore them unless I say, hey, we're at that point now where this is the lender or this is how we had to look at your file, whether it's directly or indirectly, where we've said, hey, we gave it to 3 lenders. And it won't always happen this way. We gave it to 3 lenders. We entertained 1 or 2, but ultimately this is the one we went with. And we're not impacting your credit in that regard. We're not doing that. What if one lender doesn't work, but the other one says yes? Instead of going to one directly, where they're going to have higher regulations and restrictions, where you're maybe not going to get approved, or you won't get approved for as much, as opposed to this lender who comes in and goes, yeah, we'll give them an extra 50,000. This one was only going to give them 50. We'll give them 100,000 here. We'll give them better rates there because we know their industry, and we protect your information. We don't actually quote unquote damage your credit in that regard. So when you work with the best, that is ultimately, especially in this market, that's what I would do. And I already have those partnerships with those lenders. So we protect your information. It's very safe and secure in how we communicate with you in the process. And over here, you may not know what you're doing. There's a time and place for that, and there's not. So you have to be very careful about it, and you want to work with the best. So if you bring that up to me and I go, yeah, we can ignore them. I did not submit you to a lender like that. I did not send your information. I did not shop your information like that. They're probably just buying information from the credit bureau. So like Experian, TransUnion, etc. What organizations end up doing is buying that data, and they can see where you've applied, who you've applied with, and they can act on a different party or behalf on that same party. You have to be very careful. So making sure you check in with me before you go, hey, why are you sending them? Don't be somebody who's accusing somebody of doing something. And sometimes you may not think it's coming off that way, but the way you worded it almost feels that way. Instead of ask a question. Hey, Michael, do you know why I'm getting information from this company? Do you have any relationship with them? That's better than saying, hey, ever since I had applied with somebody like you, I've been, that's, even though you don't think it's coming off like that, it somewhat comes off a bit aggressive. And I can understand you're trying to get to the point. You're trying to become more like, hey, let's get to the bottom of this. But it's also a way of how you ask the question. I'm not saying it to 1 or 2 specific people, but I've had that happen before. Just understand the way you're asking something. So over here, so we have that 6% to 18%, and then the merchant cash advance. If I went away from it for a little bit, you can look at rates between 15, if not 19 to 70% plus, maybe APRs into the 300% with the merchant cash advance, and 19 to 50% interest. They call it factor rates, 1.19 to 1.5 factor rates. It's not amortized on an interest like a bank loan. It's not even a loan. But sometimes 1.19 to 1.7, depending on your risk association. And that's how we determine also your rate. And I'll get into that in a moment. But yeah, the rates on the merchant cash advance may not be attractive, but at the end of the day, what you have to look at is the benefit has to exceed your repayment. You maybe only have the option for a merchant cash advance because of all other options you've exhausted that the lenders don't want to work with you. Maybe you're in a high risk industry where you have a high, what do you call high tier product. The word that I'm looking for here is, I just had it on my mind and I work with this a lot. So it's a high tier product where you're selling it and you're making a lot in return. And maybe it's a very volatile industry where we don't know, it's always fluctuating, different cost associations, and lenders don't want to take a risk. It's a high ticket product. That's the one. And so when you're selling high ticket, that return for the lender becomes more obscured. And so it's harder for them to actually depend on that. And sometimes they do take that risk. Other lenders will say, hey, we can't work with you here. We have to maybe look at a different section or a different service. So that's why you come up to a personal loan, et cetera. There are many reasons for it, but the cost of interest or cost of capital isn't primarily the one thing you have to look at, even if it's a merchant cash advance, because you have to take that money and think about how you're going to use it. If you need money right away, okay, a merchant cash advance may work a little bit better than a personal loan. Otherwise, you can wait a little bit. And you say, well, I needed the funds the next day. I needed it right away for this project. And it's going to also help me. And it's my only option. It's better than the personal loan that I recommend. Maybe you get more funding there as opposed to here and other flexibilities, early payment discounts, etc. And you go, well, I'm going to take this money. I'm going to double, triple, quadruple my revenue, my gross profit margins. And it can also help me net profitability, perhaps, with myself later down the road. So you got to think about these things and say, well, if I'm taking this money, how am I making 20 into 30, 30 into 40, maybe 40 into 50? Maybe I'm bouncing between 40 and 40, 40 and 30, but I'm taking 20 and paying back 27,000, but I'm making 30 to 40,000 plus. And how much time it takes you to make that? I mean, that's how you associate. So it's different for each person. If you're saving money, this is another option that can be used. Just understand your cash flow of your business. And over time, you won't even need to be taking out loans, personal loans. If you start cash flowing properly in your business, start taking care of your profitability. And I have content I made for that. I may link it to down below. But profitability, understanding your overhead, your business expenses, and where you are revenue wise. And a lot of people make a lot of money, but they don't, necessarily keep enough money. And so how you're profiting and turning a profit, you have to be understanding of that. 24 hours, we can do a pre-approval. A lot of times it's faster. Sometimes it's a little bit more depending on your file, but it can be a quick turnaround. And then 1 to 2 weeks time to approve and fund. So it could take 1 to 2 weeks to approve, to like at the final underwriting approve and then disperse your funds. That's what I mean by that. Sometimes it's less than 5 days, but expect a 1 to 2 week time frame. So if you're already looking for something that's much faster, you're like, I need it tomorrow, by today, by the next day. I can't really depend on seeing if it'll be between less than 5, a little bit less than 5 days, or 1 to 2 weeks. And maybe I can apply for this in the meantime while I'm getting my funds there. I can apply for this and see what else I can get. So that's another advantage. Note. So here is not necessarily the catch. The origination fee is 15%, which I know it sounds high, even to me, but that's how the lenders compensate themselves by offering you a low interest of 6 to 18% with monthly payments in terms of 1 to 5 years. Listen, this is no different than an employee retention credit, where the payroll management experts that I work with, the best of the best, they're looking through your file diligently. They're putting a note together, a letter together to send to the IRS. So they're putting everything, the documentation collection, is part of myself and my team. And what we're doing and looking through all of this, pre-evaluating before it goes into underwriting, doing it in more of an in-house setup is what we can do. And we give you a soft pull. So that's what I recommend a lot of the times, and being very careful and diligent. And so when they're taking their time to go through all of this stuff, there's tax returns involved, more documentation I'll get into, then filling on that on your behalf, it makes sense that there's a higher origination fee. And if that seems expensive to you, that's one thing. But the second part of it is asking yourself, whoa, how am I going to be using this funding? I'm getting 1 to 5 years. So that already compensates itself for the 1 to 5 years with a monthly repayment. That should be more than enough. And that just happens in a lot of these types of spaces where you may see a higher, even 20% origination, 15%. It's not maybe a 9% success fee, et cetera, but that's just a way of fulfilling and helping you out. And you have to put yourself in our shoes. Stop only putting yourself in your position. And I'm always in your shoes, understanding how you're thinking about things and how you want to grow in your business. But personally, first, as a human, you matter most. And then secondly, in your business. And so that's a big differentiating factor with me, aside from the benefits and everything you get with my connections. It's the personal aspect and that personal touch that I have. And I do care and I get to know people. Depends on how much you open up. I'm an introvert, so it can be difficult. So 1 to 5 years, important details, have less than 35% utilization, minimal recent inquiries. I would even limit it to less than 3 in the last month, less than 3 in the last 3 months, less than 6 in the last 3 months. Going above 6 is too much. And you know this, the less credit inquiries, the better. And if there's a way for you to help alleviate that, maybe there's some disputes that need to be taken care of, anything that needs to be resolved, withdrawn. This is stuff that I can help you with, give you some of my personal tips. Maybe it takes a form of personal credit repair, and I'll leave resources to that down below. But minimal recent inquiries. And that's what the lender wants to see. Strong credit history definitely matters. Creditworthiness, whether we're just looking at it personally and or in business, too separate or too conjointed. As a total, stronger credit history proves your creditworthiness. Do you have those trade lines built? That's one part. Positive, negative trade lines. Have you been in fraud? Maybe there's some fraud alerts that need to be removed. So you need to speak with Experian or whatever credit bureau that is before we proceed forward into an underwriting call or with the underwriting process and how it's going to be laid out. So I'll let you know what we need to take care of, but already on your own credit reports what you might need to remove. If your credit score needs to get bumped up, you need to lessen your debt maybe that you have that you're paying with interest, and towards the principal, what debt obligations, what EBITDA, what do you have? Perhaps we look at a debt service coverage ratio at some point, but we're looking at your debt to income ratio. That's how we make it a determination of how much you can get approved for. Everybody's different. So you could be realistically in your business doing 6 figures a month, 7 figures a month, whatever that number is, less than 6 figures, but you get approved between a smaller range as opposed to another person because they have a lower debt to income ratio. And then your debt obligations of what you're doing monthly to what you're making in gross revenue per month. So you have to understand that everybody's different. So if you're not generating enough, then it falls back to that where you won't get approved for as much. No recent negative items. That speaks for itself. Make sure you take care of negative late payments, trade lines reporting, any discrepancies, anything showing that shouldn't be showing. Maybe there's been some fraudulent activity. Maybe you're working on a judgment. Maybe there's something that needs to be taken care of and we can communicate. Documents that are required for pre-approval, an online loan application, and it'll be very streamlined, fast, hassle-free. Again, like I said, there's soft pulls here, and I'll show you that in time. If you filled out the questionnaire, I might leave this down below so you can get started with this. And then it's through, this whole fintech world that we're now in, this is how a lot of lenders expect it. And a lot of lenders in this space, and I'll try to create a separate video on the updates of the market, but a lot of lenders are leaning on these brokerages. Be careful about which brokerage you apply to. There are online marketplaces who just disperse your information to third parties that you're unaware of. You're not sure what you got yourself into. So it might be partially your fault. Maybe it's partially their fault too, but maybe it's all their fault, not yours, because you knew what you were getting yourself into. Not a lot of business owners do. They get email after emails. You have to be very careful, and you don't want to get scammed. A lot of people have been, unfortunately, not through me. I don't do any of that. I protect you, and I'll take care of you. I'll bring you underneath my wing. So a lot of fintech companies and lenders want to team up like that. And I already have those direct lender partnerships anyway, so I can take you to them directly. Or there's an indirect lender partnership where I go, hey, there's 1, 2 here. It's better, it's ideal to look through those 2 lenders at once, where it's going to help you. It won't affect your credit in the way that you think, but it is better. And then we filter it and we go, hey, this is the lender that works out. This is the direct communication we're going to work with. Boom. And it works better that way. So if approved, driver's license, bank statements, tax returns, pay stubs, utility bill. And then there's a little bit more here. I can go into more specific personal loan post pre-approval. Color pics of the front and the back of your ID, most recent utility bill in your name. Excuse me. Voided personal check in your name where money will be then deposited. Proof of income. Excuse me. If you are employed by other, all pay stubs received within the past 30 days and last year's W-2. So if you are employed by other, all pay stubs received within the past 30 days and then the last year's W-2. That's if that, a tax return may suffice enough. Either or, and or sometimes we may have to ask for that if you're employed by somebody else and working through a business. There are things we have to look at, but I also have to ask you of those. And if you don't have it, just say, hey, I don't have this because of this. We already went through this, or I just had to make sure. So if you are self-employed, last 2 years of personal and business tax returns, all pages, all schedules. I might need to see the current. We're in 2022, so 2021. Of course, that's last year. We're in 2022. If this goes into 2023, 2024, you know how that'll work, and I'll communicate with you. So make sure you have that ready. All pages, all schedules. Last 3 months of personal bank statements showing your payroll deposits. Make sure all pages are there. Especially when I see personal and business, a lot of the times business bank statements, when people submit it to me, I go, what? There's 1 page. It says 1 of 5. Where's the 5 full pages? And I'm always underwriting a file myself before I send it to the lender. I'm a pre-underwriter. I'm an underwriter in my own sense because I know what that lender or lenders are looking for. I'm not just going to send a blind file to someone and say, and then hope something will work for you. And then we end up wasting energy and time. And don't be a person who causes fraudulent activity. There's been people recently who have been declined for funding on merchant cash advances, primarily because they've been manipulating their statements, their driver's license, or a few other things out there. And so you have to be very careful. We catch those things. Last 3 months of personal bank statements, as I mentioned. Please make sure all 4 corners of the docs are visible so we can see that and verify for verifiability reasons. To proceed with the next stage of funding, we would require that these documents below, more or less what I've already covered, just in a different format. Sometimes we may have an extension to this. Color driver's license showing all 4 corners, front and back. Social security card, same as the driver's license. Last 3 pay stubs, if have them. Personal tax returns 2019 to 2020. Business tax returns 2019 to 2020. We might need a 2021, and I'll ask for that. For both S Corp, depending on your situation, S Corp, LLC, etc. It's different for each person. Last 3 months of business and personal bank statements. Personal voided check. No, if you have no business bank statements, doing this in a different format, we can look at it in that regard. But personal voided check, recent utility bill with name and address. Here's an example. If you have verifiable income of, for example, let's say 90K a year, tax returns, pay stubs, etc., we may be able to provide you with an approval of 40K to 120K. via a combination of installment loans, lines of credit, or credit cards. So we can do a combination of them and this is a huge advantage. So how do we come up with that 90K? Again, we look at your debt to income. How strong is your credit? Where is your DTI at? How much debt obligations do you have on a monthly basis, on a yearly basis? How does that look like on a gross revenue? What are you making? And so we do that DTI and you have too high, even over 30, 35, 40% high utilization on top of all that. There's a reason why you're not getting somewhere between 100 to 200, 100 to 500,000, wherever you want to get into. And there's a lesser amounts, but we will look at that. And I'll come back to you with feedback after I look through the underwriting and I get feedback from my underwriter and I go, hey, this is what it looks like. So each person is different. Somebody who we may have to verify your income at 100, somebody who has to be verified at 120,000 to be getting maybe 40 to 80,000, maybe 120,000 to get 40 to 50, 40 to 60. Maybe somebody who needs verifiable income at 90K gets between 100 to 200K. So it just depends. And if you're in the real estate investor space, I've spoken with plenty of people on this, whether they're doing commercial properties, fix and flips, multifamily. They're looking out there to get business credit cards. They're looking at taking on a personal side, but more so on their business credit, getting working capital, but looking to use it towards real estate investments, whether that's rental investment or whatever that may be. You're looking at, okay, is it fully owned, not owned completely? I've spoken with so many people in different situations, and I go, well, a personal loan may make more sense, whether you're saving or you're using this as an investment to grow your revenue. This may be an additional amount to a business credit card, to the other types of funding solutions, to what you can already have, and it'll make a bigger difference. And you'll be building more installment loans, maybe revolving lines, and you're getting more equipped. Perhaps it's just personally, and you have to also work on your business side. So application, I'll show you where to go through. And there's a bit more here. There's communication on the back end that we're going through and getting you the right help needed. I'll follow up with you and say, hey, after you get pre-approved, I go, hey, does this seem attractive to you? And if so, you say yes. Can you please let me know a time to book an appointment with the underwriter to go over what the expectations are in the underwriting process. I've already kind of more or less gone through it, but they'll go into it a little bit more deeper in terms of how they'll also respond to you. Also, what to expect, maybe the origination fee they'll cover, and the documentation perhaps that will need to be handled, and what the expectations are, more or less of what I've already covered, but in a little bit more detail. So make sure you let me know. Maybe I'll say, hey, what time are you available tomorrow between the hours of 10 a.m. to 6 p.m. Eastern Standard Time? We figure out your Central Standard Time or Pacific Standard Time. What does that mean? That are you not open the next day, maybe in 2 days from now? But the sooner the better, ideally. And you'll just communicate with me and we'll go through underwriting. I'll let you know. And be very careful about getting emails from other lenders that we have not associated you with, or the one lender we associated you with. There are people out there who are there to get you, whether they're legitimate or not. I don't associate with them in that regard. And they're buying leads. They have other ways of syndicating and making sure they have your information. You've applied recently, so they're going to go out there and apply and try to get you. And a lot of the times they care about is making money for their business, and they put you second. They say, yeah, we're going to help the business owner. We care about them first. But they're trying to make money for their own brokerage or whatever their organization is. And do they even care about you on a personal level? They may take your call. They may hear from you, but do they really take a little bit of time to get to know you, who you are? Depends on how much you decide to open up. And again, I'm an introvert, so it can be difficult at times. So that is going to round up this in-depth video. Hopefully you got a lot of value on the merchant cash advance alternative, which is that personal loan. You do have to have stronger credit though. With the merchant cash advance, you can get in with like 450, 500 and above, and that may be a better advantage. But work on your credit. If you want a personal loan, I can work with you. I'll have more information down below. And even if that doesn't work, don't look at the merchant cash advance as being a negative. Just because you're not getting 1 to 5 year, perhaps, maybe you're not getting lower interest and a monthly repayment, doesn't necessarily mean it's bad. It just depends on how you're using that funding to grow and expand your business. Now, if you're using it as a way of maintenance, as you're using it in a way that's going to push back your cash flow, you're already negative, you're going into the negative, then it may not make sense to take it, or not make sense to take the most. Maybe we're going to give you some negotiation power and say we have 4 offers, we have one at 100, one at the lowest at 30,000. Which one would you like? Start you off at the 30, then you could grow. And okay, now I can take another one, come back to the same lender. Instead of saying I took 30 here, then going to a different one. We can say, pay off this, unless you needed it fast and you're growing faster, but take what you can, work with that same lender with myself, and you're going to get the best advantage, bar none, in this industry. And so the 0% interest for 6 to 18 months, That's just a business card, a credit card building program where you can get multiple business credit cards, start stacking them, and literally at 0% APR. Now, it depends on the type of business credit card you get. Is that 6, 12, 18 months? Where is it? And the contingency there is making sure that you make those payments after those 6 to 18 months. Don't just take something that just like, oh, I'm just using it to service all the debt. And then at the end of it, I can't even pay the credit card back. And so now you're in a deeper hole. Don't do that to yourself. Make sure you're using good debt, not bad debt. And so I'll leave more information on that program down below. But it's a true startup program, no docs included into this, like unlike the merchant cash advance and personal loan and other services out there. No docs, no collateral in most cases. If it's an unsecured card, not have to be secured with collateral or with some type of a payment to get that or that get higher limits. But I'll show you more of that down below. I'll leave more information of that. Hopefully you got value out of this video. Please give it a thumbs up if you did. Share it with others who you feel will get value out of it. I would greatly appreciate it if you did. Start spreading the word, helping spread that, hey, there's a person here who's not just trying to cram a merchant cash advance product down my throat. He's not a salesperson. I'm not in the traditional sense. We're all selling each other at some point, and you can say that, yes, I'm selling the cash advance, but I'm not. I don't even like the word selling. I didn't grow up thinking that. I grew up academically, going to school and not getting into the sales space. But I will have an amount of information and a great amount of value that I want to provide to you. And if it makes sense, then we can run with it and I'll help you. I won't pressure you. So that questionnaire down below as well, make sure you fill that out if you haven't, all information too. And if you haven't subscribed, please click that subscribe button and as well as that bell notification icon so you will not be missing out any future videos that I will be coming out with. And yeah, there's quite a bit more to the merchant cash advance versus the personal loan, but you got to see the gist of it and how it can be used effectively, a combination and the expectations of each service. Not necessarily is this one bad, but just think about the pros and the cons and where you are currently in your business if you can even afford other solutions. And we just grow into those over time and we start working with you. So that is everything from me. Appreciate you for tuning in. I will talk to you soon.